Hey, this is Matt from InvestiQuant. Today is Thursday, September 23, 2021. Yesterday, the markets gapped up and pushed higher on the FOMC announcement day. This was following a sizable lower close on the daily charts. If you were to look at the closes of the dailies, you'll see that Tuesday was a 20-day low close. Yesterday was a sizable up gap following that 20-day low close. So we're starting to bounce off of the lows, and we are continuing higher in the overnight session right now. We're currently trading up above yesterday's highs as we approach the open. So we're going to look at that pattern exactly as described right there in Discover this morning and see what it has led to historically. So let me go ahead and get it set up with all four instruments. Setups based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, and exiting at 4:15 p.m. Eastern Time. Now, for the opening filters, as I said, we are pushing higher in the overnight session. We are above yesterday's high. So that's the opening location I'm going to use, is this one right here. Open above prior day high. I'm going to hit equals right there. That'll add it to the test. Then I can go to the price patterns library, and I can add the context around yesterday being a rally off of recent lows. So to do that, in the price pattern library, in the new lows section right here, there's a pattern called day after update following a 20-day low close. It's also available right here and active today. I'm going to click on it right there. And that's a pattern where you close at the lowest closing price of the past 20 days, and then the next day you get an up day. So that took place yesterday, and then next I'm going to go into the indicators library. We are still below a 10-day simple moving average, but above the 200-day simple moving average, and that will conclude all of the information that I want for the study. Now I can click View Results. All right, here we go. So these are the results based upon entering the market long at the open of regular trading hours, 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when yesterday was an update that came on the heels of a 20-day low close, and then today's open is above yesterday's high. This is in a weak bull market environment. Historically, we've got 38 samples in the S&P, 27 in the NASDAQ, 34 in the Dow, and 26 in the Russell. The win rates on these are all favored. So S&P coming in at 61%, NASDAQ 70%, Dow's the weakest at 56%, and Russell at 65%. So all four of them have closed above the open more often than not historically. If we look at the average moves, looks like the S&P is identical in size there for the average move higher versus the average move lower there. For the NASDAQ, the average loss is larger, so bigger moves to the downside there on average. That's also the case with the Dow. The average loss is larger there. And then for the Russell, it's fairly similar in size for average win versus average loss. So historically speaking, this pattern has led to a green daily candlestick more often than not. Hopefully you found that helpful. Good luck today. We'll see you next time.